If 2020 was the year of the pandemic, 2021 is shaping up to be the year of stressed supply chains and the shortages economy. In scale and scope, unprecedented supply shortages have had a cascading impact on global supply chains and prices of key inputs. The business world is fretting about shortages of big-ticket items like chips for automobiles, which run the sophisticated electronic systems in cars, to the humble foam cushion which drivers sit on. Steel and lumber prices in America are at record levels, pushing up prices for finished products and homes. Widespread labor shortages, and strife, is threatening to hold back a nascent economic recovery, and shippers are scrambling to get hold of scarce shipping containers, pushing up freight prices to record levels. What are the policy pathways to deal with the shortages economy? Inflation hawks and Fed watchers are of course looking at the supply shock from the perspective of rising prices and inflation. Financial markets have been spooked in recent weeks over concerns that the Federal Reserve and other leading central banks are perhaps behind the curve in assessing a potential rise in inflation. Conventional market wisdom is that central banks will have to abruptly change course by tightening monetary policy later this year. There is also the view that supply chain dislocations are to be expected due to a global pandemic, and normalcy will be restored in the months ahead via businesses' restocking of inventory. I would argue that the market's worst concerns, while relevant, are an imperfect gauge to what is happening in the real economy. Not since the 1973 oil embargo has the world economy seen a supply shock on this scale, and it is useful to understand the three macro drivers of these shortages. As a start, the global pandemic has led to a fundamental rethinking about the utility of offshore supply chains, particularly but not limited to critical emergency items like medical equipment and supplies. With business leaders working from home and businesses stranded due to the pandemic, there were obvious strains in organizing and coordinating complex supply chains. The supply shortages now underway is likely to accelerate two trends: some level of reshoring to ensure business continuity, and companies stocking up on more than needed inventory to keep production lines humming. Both will drive up costs and dislocate existing supply chains. The pandemic is also upending the traditional relationship between labor and capital. For much of the last few decades, as French economist Thomas Piketty has noted, it is capital rather than labor which has benefited from globalization and an integrated global economy. With President Biden emerging as the most pro-labor and pro-trade union leader in a generation, labor's bargaining position has strengthened considerably, further enhanced by widespread labor shortages.